What if Bitcoin's most important feature suddenly became its biggest controversy? Bitcoin has always been built around one sacred number, 21 million. That fixed supply cap is one of the main reasons people call Bitcoin digital gold. No central bank, no money printer, no random supply expansion. Just 21 million coins, and that is it. But now, Eli Ben-Sasson, the Zcash co-founder and CEO of StarkWare, is challenging that idea. He argued that Bitcoin's 21 million cap doesn't make sense because private keys get lost over time, and when a private key is lost, that Bitcoin may still exist on the blockchain, but practically speaking, nobody can move it, sell it, spend it, or use it. It is basically frozen forever. That means Bitcoin's official supply and Bitcoin's usable supply are not the same thing. Some estimates suggest millions of Bitcoin may already be permanently lost. So Ben-Sasson's argument is that if coins keep disappearing from circulation over time, Bitcoin may eventually become too scarce for its own good. His proposed solution, instead of a fixed total cap, Bitcoin would have a hard ceiling on annual issuance. He floated a maximum inflation rate of around 4% per year, and as you can imagine, Bitcoin supporters did not exactly love that idea, because for a lot of Bitcoin holders, the 21 million cap is not some random technical feature. It is the entire point. It is the reason people trust Bitcoin more than fiat currency. It is the reason investors believe Bitcoin cannot be diluted the way dollars, euros, or other currencies can be. So even suggesting a change to that cap is enough to trigger a massive debate. But here is where this gets more interesting. This is probably not going anywhere. Changing Bitcoin's supply cap would require overwhelming agreement across developers, miners, nodes, and users. And realistically, if someone tried to push inflation into Bitcoin, the network would likely split before the main Bitcoin community accepted it. So the story is not that Bitcoin is about to lose its supply cap. That is extremely unlikely. The real story is that this debate exposes two huge questions for crypto. First, how much of Bitcoin's supply is actually usable? And second, what happens to Bitcoin's security model over the long run? Because right now, miners are paid through block rewards and transaction fees, but every halving cuts the block reward lower. After the 2024 halving, the reward dropped to 3.125 Bitcoin per block. Eventually, decades from now, block rewards go to zero, and miners will rely almost entirely on transaction fees. That does not mean Bitcoin is broken, but it does mean the long-term security model still depends on real transaction demand, real fee markets, and real economic activity on the network. And that is exactly why this debate matters beyond Bitcoin, because the next era of crypto may not just be about holding assets. It may be about connecting liquidity, moving capital across chains, and making blockchain networks more useful together. Bitcoin has the deepest capital. Ethereum has the strongest DeFi ecosystem. Solana has speed and a massive trading culture. But the crypto market is still fragmented. Liquidity is scattered across different chains, different apps, different bridges, and different user bases, and that is where LiquidChain fits into the conversation. LiquidChain is a Layer 3 presale project built around the idea of unifying Bitcoin's capital, Ethereum's DeFi depth, and Solana's speed into one execution layer. The goal is deeper liquidity, faster trading, and safer flow across major blockchains. In simple terms, LiquidChain is trying to solve one of crypto's biggest problems. Everything is powerful, but everything is still separated. For developers, LiquidChain says the vision is deploy once and reach users across multiple ecosystems. For traders, the idea is better access to liquidity without constantly jumping between disconnected chains. And for investors watching where crypto infrastructure goes next, that cross-chain liquidity thesis is worth paying attention to. Right now, the LiquidChain presale is priced at 1 liquid equals 0.01478. It has raised over $891,000 toward its current stage target, with the next price increase coming soon. Now, to be clear, presales are high risk. You should always do your own research, understand the tokenomics, and never invest money you cannot afford to lose. But the timing of this story is interesting. While Bitcoin's fixed supply debate is reminding everyone why scarcity matters, LiquidChain is aiming at the other side of the market: utility, liquidity, speed, and connecting the biggest ecosystems in crypto. So the big question is this: is Bitcoin's 21 million cap untouchable forever?